Our global business editor, Udayan Mukherjee, joining us now. Udayan, markets have kicked off the week on a strong note once again. Earnings rolling in thick and fast and things looking upbeat.
Yes, Abha, I think we cannot fault the market this year the way it started off. I mean, it's been such a quick ride and we are almost within kissing distance of the old high of 18,500, 18,600 Nifty. I mean, a couple of good days gets us there. So, and I think it would have come as a surprise to most people that we are already talking about making a new high 2 weeks into the new year, because the general belief was that this will be a more volatile year, that there's a lot of turbulence going on in the Western world with interest rates, and this is a time for the market to consolidate, even correct. So I don't know whether looking back we'll think at that dart into 16,500 Nifty, that area was the extent of the correction, 8-9% from the top and no more than that. So time will tell if that was all the 10% correction that we saw, or the market is actually pulling back to retest that old high, and then we'll see another leg down coinciding with something which happens in the Western world. So it's going to be a fascinating few weeks for the market, not least because the kind of turbulence that we're seeing in the Nasdaq over the last few days. So fingers crossed, but I think the event of the next few days to watch is if the Nifty actually makes a new top just a few months after people had written it off, saying that we are not going to see a new high for many months to come.
All right, so keep an eye on global cues. That's perhaps the one vulnerable area that markets may have to sort of keep in mind as they continue to enjoy this rally or momentum that they're seeing early in the year. Now, with less than 2 weeks to go for the union budget, what does the market expect from the finance minister? Samir Arora of Helios Capital speaks with us on what the Lal Street wants to hear from the budget this time around.
Samir, good to see you on the show again. This time, should there be any expectations from the budget? Or, you know, corporate India has never had it so good with taxes. I mean, on top of that, is it just enough to say no news is good news, just don't do anything to rock the boat? We don't need anything from the budget from a corporate or a stock market point of view this time?
I would think that is a very fair assumption, that we don't need anything. But if you read the papers, these guys are still trying for some benefit here, some benefit there on unlisted equities. And sometimes I read that even on COVID expenses or work from home. But generally, I would totally agree that there is no need for any new things to happen. And if anything bad doesn't happen, that will be a good budget.
But what's the general sense about this year, Samir? I mean, you're sitting in America right now, where over the last few days we've seen intense volatility in the technology, high growth technology stocks in the Nasdaq. But here things seem to be quite calm in India. I mean, if you had to look forward, are you expecting a lot of volatility this year, or do you think the market's more or less at peace with what is expected and it should not be a very rocky year?
So I think right now it's at peace. The only thing is that the interest rate hike assumptions or forecasts have been going up very rapidly from maybe 1 a few months ago to now. Recently I read Goldman Sachs says 4 in this year alone. But even there, if you look at the total cumulative hikes that are forecasted, which are 8 to 9 over 2.5 years, which is 4 in 2022, then 3, and then maybe 2 or 3, that cumulatively adds up to say 2 to 2.5%. And that would only take us back in US to merely back to what it was in 2019 mid, so pre-COVID. So if all other parameters are going up to pre-COVID levels from GDP, unemployment, blah, 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 whatever, then to say that interest rate should not go back to 2.5% by 24, I think it would be too unreasonable. So I would think that in that sense, because currently you are in transition from one era to another. But if you also look at this thing that, you know, long tenured equity where there is a lot of valuation, those are correcting. Actually, if you look at the big 4 or 5 tech companies, they don't have very high valuations. Google or Meta, maybe Amazon has a little bit more, but none of the others would be in the 20s. They would be lower than most consumer companies anywhere in the world also. So I think a little bit of I'm hoping or expecting that it is shorter term, and that these interest rate hikes would be sort of par for the course in terms of from where we've come, and why should it not go back even to pre-19 levels. For India, the only thing is that will
What is
they
your
follow a
own?
little bit?
Yeah, sorry. You.
No, for India, the only thing was whether India
Go
will
ahead.
also have to maybe preempt or have one or two interest rate hikes just because Indian inflation is also high. But actually, Indian inflation these days is lower than US inflation. Indian inflation consumer is below 6 and US is 7. So let's see, that's also a new thing for us in our life to see that.
But how has your positioning changed, Samir, in terms of whether you remain as bullish as you were a few months ago, or has that long-short position, I mean, in a fund like yours, changed to factor in higher volatility this year?
No, so the first thing is that you may have lower expectations from the market, but that still may not need a change of positioning, because all you want is that the market should have reasonable returns going forward, let's say in the mid-teen range. If you get more, we take it, but we don't get overly excited unless it is very visible that there's an angle to it. So today we are expecting that the market will be positive for this year. It will be reasonably positive, and therefore our net is in the high 60s range. Our average for the last 16 years is about 62%. Right now it might be 68, 69% because the momentum is there, and that last 5-7% can be cut in any sort of lowering of expectations, or even more if there is a bad thing happening. But right now, as long as you expect that the market will have mid-teen kind of returns, which is what I think is possible, and I can explain, then there's nothing much to change in that sense. The only thing is sometimes with which stocks to short, and pre-budget you will short some different kind of stocks. But generally this year we have been shorting only the very high valuation stocks.